Welcome back to Yahoo Finance Live, everybody, with the mega media merger between Warner Brothers and Discovery finally official. Let's check in now with the stock. The first time, WBD. A relatively muted day, given all the talk and all the interest about this massive merger. Up 31 cents, 1.27%. If you're not familiar with WBD, Warner Brothers Film Studio, now under the same umbrella as HBO, HBO Max, TNT, TBS, CNN, HGTV, Food Network, and others. So how do all of these pieces fit together in one very complicated puzzle? Let's bring in Allie Canal, who's been reporting about this. Allie, so many questions moving forward. In particular, what is the focus? Is it on the big blockbuster films, or is it on trying to fit all these together under one mega streamer? It's going to be fascinating times.
Definitely. And, I've spoken with a few analysts in this space, and all of them are so excited about this. WarnerMedia-Discovery, they think this is the next big thing in streaming. I spoke with Bank of America analyst Jessica Reeves. She said this will be the most exciting story in this sector for the next few years. So there's a lot of bullish optimism here. And I think it mostly has to do with that pipeline, with the content offering. You were just listing some of the subsidiaries of Warner Media, and we have the elevated scripted content of that group. But then with Discovery, their content does really well internationally. They have some cult favorites like Dr. Pimple Popper and 90 Day Fiance. I know a lot of people that are obsessed with those programs and watch them frequently. Warner Media also has some lucrative brand, development deals with some high-level creatives like Issa Rae from Insecure, Mindy Kaling, Matt Reeves. And at the end of the day, we know that content is king. And at the end of 2021, we saw that HBO and HBO Max had a combined subscriber count of 73.8 million. Comparatively, Discovery last reported 22 million subs. So there's more room to grow here. And I think with David Zaslav leading this joint venture, a lot of people have immense confidence in him. They think he will fill the hole that was left when Bob Iger left Disney. I think that is where a lot of this optimism is coming from. And there's a lot of confidence in this new entity as well.
And Allie, you mentioned subscribers. What concerns still lie ahead for Warner Brothers Discovery, especially as investors move away from solely focusing on subscriber growth?
Yeah, Rochelle, the biggest issue is going to be profitability. Streaming and production costs have skyrocketed, and there are other questions that investors are asking besides that coveted subscriber number. They want to know, is this a real business? Are we making money? How are we doing with the impact on EBITDA and free cash flow? And with this entity in particular, it's going to be really tough to overcome those challenges. HBO Max alone is likely to generate about $1.5 billion in EBITDA loss. The company has a free cash flow target of roughly $8 billion by 2023. So investors are a little curious if that's even possible to obtain. So there might be some short-term pain in terms of that free cash flow, in terms of that profitability. Also restructuring woes, leadership changes. There's going to be more layoffs, especially in the coming weeks and months. That's difficult for any company to really deal with. So still a little bit of a bumpy road ahead for Warner Bros. Discovery. But I think in the long term, this does have the potential to be a really strong player in the streaming space and compete with some of those big guys like Disney and Netflix. And analysts, very hype. Investors, though, I think are a little lukewarm, which is why I don't think we saw an extreme stock reaction today when we saw the debut this morning.